On this episode of The Art of SBA Lending, we have Keith Kohler. Keith is what we in the business refer to as a loan broker, but his firm that he founded, K2 Financing, is a lot more than that. It serves as an advisory service to small business owners, almost like an outsourced CFO, and he also does help arrange the financing. So we as lenders like working with folks like Keith because he has a pipeline of all these clients, and we want to talk to him to learn how we can build these types of relationships with folks like him and maintain them, keep them happy so that we can get business from them for years to come. So there's a lot to unpack in this episode, so stick around. Hey Keith, thanks for joining. How you doing, man?
I'm doing terrific, Ray. How about you?
I'm doing good. Doing good. Thanks for joining.
Yeah, it's a pleasure.
So I'm looking forward to talking to you because, I've always been a lender, as you know, and you're kind of
hmm
on the other side, more of like an intermediary, amongst
hmm
other things. But
hmm
it's always fascinating wondering what you do on your side to get things to my desk. But before we get
hmm
into all that, I just wanted to ask you, like, what was your first kind of experience with SBA?
Oh, wow. Okay. When I think back, probably the first SBA loan I did was maybe 5, 6 years ago.
Oh, wow, recent.
Yeah, because the work that I do in advisory and helping people get what I call the right financing at the right time, it started many, many years ago in 2008. But my real concentrated effort to be a deal maker really started 5, 6 years ago. And I became aware of the SBA program just by communicating, just by networking and seeing what's out in the big wide world. And of course, I was immediately drawn to it because of what it could do for borrowers, particularly because of only the 1 year requirement of being 1.15 debt service coverage ratio, all those things which made it easier for the borrowers I have, which oftentimes can be challenging to qualify for lending a lot faster than if they were going through a conventional route. Once I saw that, I knew that I had to get more involved. And so I just immediately reached out to lenders who I knew were doing SBA programs. And then through a lot of luck, I came upon you, I came upon others in the industry, both in South Florida and across the nation, who I've worked with over the years.
So so 6 years ago, that's pretty recent. So
Mhm,
like what were you
mhm.
doing when you say advisory work? What were you doing up until that point, to get to that point?
Sure. So I really started in financing in 2008, right in the crisis, believe it or not. And my journey towards working in this area and being an advisor and intermediary started more on the working capital side. And believe it or not, it started when I was diagnosed celiac or gluten intolerant, because my original discussions with founders of businesses was because I was working with them on gluten free certification of their products. So that's how I started in that industry. And when I spoke with founders about certifying, routinely they always said one bugaboo for them, one thing that caused them anxiety was financing and not understanding what were the options available to them, where would they even go. So because I was celiac myself and I was interested in seeing these founders succeed, I knew I had to find a solution on what financing could look like. And before I really got heavy into term loan lending and SBA, my first stop was in working capital. So working with people on receivables and inventory financing. Fintech really wasn't a thing back then, but where I first dipped my toe in the water while I was doing other projects on
Gotcha.
on strategy, et cetera.
Okay. So you discover, you get into this SBA product, and now it's
Mhm.
been 6 years. So I guess how has that evolved over the last 6 years in terms of your approach to getting, these businesses access to the SBA program? Just how you approach things. Has it changed at all?
It's gotten deeper and broader. So in the beginning, when I didn't know much and I was just starting out, probably like a lot of people in my space, you might have some good experiences, you might have some bad experiences. And I think for folks like me, when we're just starting out, we don't tend to have as much of a knowledge about or know how to ask all the right questions. of our lenders. And I think just by success and by failure, you learn a lot more about how to see what you can get done, who are the best people to work with and why. And so I think of it just like learning a foreign language, right? You have to go through the basic, intermediate, and advanced steps to get to fluency. Now I consider myself incredibly fluent because not just what I did on my own, but who I've chosen to work with.
Hmm.
And really, the key to my success in working with lenders and building a book of business was being curious, being someone who really wanted to ask questions, who wanted to really truly understand how things work. Because, of course, at the end of the day, I'm judged on my ability to get stuff done, to get the project done, and to get the client funded.
I mean, that makes a lot of sense, obviously, for me, because I know you and I know what you do. But and most people that tune into this podcast are SBA lenders. But if
Mhm.
a small business owner happened to stumble across it, like what you said is so important because it's almost trial by error. And every SBA
Yeah.
loan you do, and I guess it's the same on my side too, but like every time you do one, you just get a little bit, as long as you're like a sponge and you absorb it and you have that mentality that you want to learn and get better, then
Mhm.
every single one you get better and better and better. So if I'm a small business owner and I am like, hey, I need to buy a business or buy a building and I'm going to need an SBA loan, and you just go out to market or you just call your banker and you just kind of assume like it's like getting a house loan or a car loan. Like obviously we know it's so different. It takes a lot of expertise, a lot of expertise. So working with someone like you, it's like a shortcut because you've already been there, you've done that, you've learned
Mhm.
from the mistakes, and they could just, instead of potentially making all those mistakes, go directly to someone like you and
Mhm.
increase their chances and probably get it done quicker.
Thank you. And I believe that to be so. And really, what the way I've evolved in the way I work with people is today I have really a two-stage process. Knowing that business owners and borrowers are busy people, they're running their businesses, they're typically really, really good operators. And yet most of them are people that, the finance function or getting a loan is an intimidating process for them. Maybe they've been unsuccessful in the past, or in most cases, they've just had bad relationship experiences and they kind of don't have an idea about what's going on. So at a first level, when I talk to people for and in a discovery call, I just want to understand, is there a deal that's possible? And so I just ask the most basic questions. For example, if I were talking with you right now, the first thing I would ask is, how was 2020 for them?
Mm-hmm.
Because we know if they weren't profitable in 2020 on a tax return, well, it's game over. They're not going to qualify for any type of SBA loan unless it's something where a deal could be done on the basis of projections. So I do ask them if
Right.
2021 is going well, if they're profitable. And particularly, we know if it's a real estate deal, SBA lenders are more likely to look at projections based deals than they would a working capital based deal or a working capital request. So I really just asked that basic question, 2020, 2021. If those pass the tests, then I ask them personally how they're doing. I ask them without filling it out because it's the most cumbersome document of all, the personal financial statement. I ask them some key questions on that. And I ask them about their credit score. So that to me is level one analysis to say, do we have a deal here? And what's the basis for that? If I
Right.
believe there's a deal, then at level one, then I'll go to you or I'll go to other people in my network and just give them the basic snapshot and say, hey, is this something that you think you can get done? And 9 times out of 10, I get a yes because I already know beforehand, Ray, what you like, what other lenders in my portfolio like. And yet sometimes I get some surprises because your credit box may change or you might have a different appetite. And particularly with the roller coaster of the pandemic, there were some kind of, I wouldn't say surprises, but changes and pivots in the way banks look at deals. And fine, I was able to roll with that because my network is large enough that I know kind of where to plug in and where the most likely people are. So once I would get an approval from you saying, yeah, that's something I think I can look at, then I'll go deeper and I'll assemble the full package for you, all the 3 years of everything, the full docs. That way, it's really, I think, a well thought out process because it doesn't waste any time of the borrower. It still gives me an opportunity to prove that I'm of value to them, particularly if they're a not now. Here we are in August, right? So if someone did report a loss in 2020, yet they're crushing it in 2021. It's exciting for me to speak with them now because I can work with them and stay in touch with them throughout the year so that when they come to report their draft tax returns, that, hey, they really are showing the profitability they need and all the other criteria that an underwriter would look at to determine, wow, okay, now they're ready. And now they have an opportunity to go after lending. So I
Right.
like my process. And that way, no, it doesn't waste anybody's time because I'm not interested in wasting theirs, mine, or my lenders.
Well,
I'm
it's a
very
good
yeah.
well, it's a good process because a lot of folks that are in your position that I work with, typically on the starting out, they're trying to get a deal. They're trying to get a deal
That's right.
done. That's what it
Mm-hmm,
kind of seems like. They're trying to sell a product almost.
mm-hmm, mm-hmm.
You come at it from a totally different perspective, which is, I think, the better way to approach it, which is like a consultative
Yes.
approach, an
Mm-hmm,
advisory approach,
mm-hmm.
because it positions you as the expert. You're interviewing them. It's not the other way around. Sure, they can ask questions, what types of terms are we working towards, those types of things. You need to be able to demonstrate what you're doing, and by asking questions and actually understanding business, I mean, it's the best way to do it. So if there's loan brokers listening to this, that's a big takeaway for them. Now, I'm a lender, so what I'm really interested in is how I can build and maintain these types of relationships with folks like you, because you're constantly building a pipeline of deal flow, clients, and you're bringing that to a lender, which is of great value to a lender who is trying to build their own pipeline. You must be getting hit up left and right by all these different lenders on like LinkedIn, email. Are you not?
Yeah, I do, especially when I got a little bit more involved again with LinkedIn. Ray, I've been very blessed. Everything I've done so far has been referral based. I've never had to go out and do any type of outbound marketing. Now that's going to change relatively soon. Yet until now, it's been referral based and former customers and things like that, which has been a terrific blessing. Yet, because I do have the term SBA in my LinkedIn profile, I do get hit up a lot by, I would say, particularly relatively new business development officers who are just starting out, maybe sometimes they're in commercial banks, sometimes they're part of the non-bank SBA lender group, all over the place. And I'm always happy to have a conversation with them. It's a good investment of my time because they might not be a fit to work with me right now. I might not be a fit for them. They might not be a fit for me. And yet a new relationship is always good to have because sometimes they get into better situations later where they're in better shops that are more aggressive, that more fit my criteria. So I don't mind really being hit up. It's just, it would take a lot for them to be part of my roster and my bench right now because I'm really happy with the lenders I have.
Well, if you're going to approach a intermediary type of a loan broker, a mortgage broker, as an SBA lender, I mean, there must be some pitches that are better than others. I mean, what do you think the best way to get their message across to you, if they did, like, if there was actually someone out there who you think maybe could add value to what you're doing, like what's the best, because it's selling. It's like you're blindly reaching out to you. I'm blindly reaching out to you, Keith. Like,
Mm-hmm.
and I get hit up all the time by different folks, and there's some that I just say that's a horrible way to reach out. I mean, do you ever notice
Mm-hmm.
like the different ways people reach out, and does anything stand out as a more effective way than others?
Yeah, Ray, that's a great question. And I think it has several layers. When people reach out to me, I'm looking at them in a couple of ways. One is kind of the objective, what are they really offering? And we know within the SBA program, yeah, while there's an SOP, as I've learned over the years, there really is a lot of shades of gray as what can be done. There's some interpretation. And I'm excited when an SBA lender comes along and they understand that. They understand that it's not just one cut and dry package that they're offering, and that they themselves talk in ways that give me the idea that they have flexibility, that they're willing to I wouldn't say go over boundaries, of course, but push up against the boundaries in order to try to get deals done. I want to hear from them that they are strong advocates for the borrowers, that they're not just that the BDOs are people that have influence in their organization, that they're not just paper pushers and hope for the best from a credit department or an underwriter that something will work out. No, I need them to be as aggressive and as interested in getting a deal done as I am for the borrower.
Wow.
So yeah, I really want to hear their their advocacy ability, the fact that they are willing to go to battle, not that they're just in their tight little box operating kind of in a silo, that they're really fully integrated within their organization, that they have access and meaningful conversations with their chief credit officers, with their bank management, and that honestly, that they can prove to me that they've been successful in getting hard deals done. And I'll ask them about that, and that they have been someone who is respected within their own bank.
That dude, that is what you just said. Crazy. I mean, you just went down the list on things that I don't think about every day. I do those things, and I guess that's why we work together.
Yeah.
But I guess there's people that don't do that. So let's say somebody does that, you give them a try. You don't
Mhm.
really know if it's talk or if they can actually back up the talk with action. But have you, started or sent someone a deal and maybe got a little bit down the road with the deal and it just went south really fast?
Oh, yeah, I've had several. And I think for someone like me, and I'm sure your listeners and you have heard this in different settings, the worst thing in the world is a long no. And someone like me, I've had them. They're the worst experiences by far. I've had, in fact, two this year, and it was horrible. It was really, really horrible. Now, the business development officer, I felt in both cases was pretty good. And yet, this person had trouble because the credit team changed on her.
Mm.
And you know that drill. It's like a new administration coming in, right? With new preferences, new ideas about which industry should we be serving. The other thing that I saw, one of the long no's was as a result of a default in the bank. So the one long no that was really painful for me was a food and beverage deal, which is a lot of the heritage of the companies that I work with. And the bank had a major default, so the credit chief credit officer said, "Hey, I'm not doing these for a while. I'm not sure what's happening in this industry. It's a big stain, so I'm concerned about kind of supply chain and all the other things. So we're done." And what can I do?
To recap some of this, I just want to make sure because I want to make sure I learn from this conversation. So you have someone who can tell you, upfront, yes or no.
Huh?
Sort
Absolutely.
of like a certainty. Like I was talking to maybe my first broker I ever did a deal with, and I just closed a
Mhm.
deal with him on Friday again. And but the first deal I did with him, I was like 23, and I'm glad he gave me a shot and we got it closed. But he's been with me this whole time, and I talked to him. It was a Saturday, but I got an email from him, and we had a conversation, and he was just telling me because we had just closed a deal, and he had basically said, along the lines of like, when you say something, I know it'll get done. Like your word carries weight to it. You're not just talking. And
Yes, yes, yes.
I was like,
Mhm,
I get that was nice to hear, honestly. I mean,
mhm,
I don't have these conversations at all. I'm just a worker, I'm just trying to do
mhm.
the deals. So I'm not talking to the referral sources often. My way of building rapport is just trying to execute on deals. I'm getting better at it, talking more and more to people like a human, but like I'm very much deal focused. But so that's one of the takeaways you're saying. So, and communication, constant flow of communication,
Mhm.
that obviously very important. And so what else? Communication, what else?
Yeah, I think another thing that I value very much is terrific insights and a willingness to get creative on structure. So, an example would be I think only about 25% of the time Do I to come to someone with a specific loan request? And what we wind up funding is exactly what we started with in the beginning.
Right. So it lands on
Okay.
my desk and, might not fit exactly, but we're going to finesse it into the box with a little creativity and
That's right.
pizzazz.
Yeah, because a lot of times where that's the case is where there's working capital involved. Now, we know lots of lenders are real estate centric or maybe only real estate lenders. Others are willing to do working capital, maybe on their own. Some like the combination. So, a lot of times in the discussions with you or other people, when I look at all the opportunities of what we can do on the lending, whether it's 100% real estate or it's 90% real estate, you might say, or other lenders might say, well, Keith, I'm comfortable with working capital only up to a certain amount. Or the other big one, which we know is massive, is how much uncollateralized exposure an SBA lender is willing to look at. So that's where the numbers can have wide ranges between what you yourself might be willing to do or another lender at another shop might be willing to do. And that's where the art makes it interesting because I tend to work with high growth companies.
Mm-hmm.
And for them, like a food and beverage company starting out at $1 million, if they're looking for working capital for equipment for inventory, for other things to keep growing, the more I can get them in working capital, the less they have to raise in equity or the less they have to put in with their own personal contributions. So having those discussions at the business development level where you can say, hey, I think my credit team will be comfortable with this much. Okay, well, that might not be the number I had in mind. Maybe it's lower. Almost always it's good or higher than what I originally thought. And having that discussion at the beginning and testing it, like what you do in pre-screen and running it up the flagpole, is so incredibly critical. Now, something might come back at the very end, which says, okay, instead of this, we are comfortable with that, but it's still a good deal. And to the degree that I understand what are the levers and what things matter to you, particularly once we get deep into the underwriting and things always come up, right? That can drive a deal towards maybe a lower amount, sometimes a higher amount. I want to be able to understand where's my flexibility within the deal. If I have to reduce something, can I raise something higher? Like oftentimes when I have deals that have components of equipment, inventory, and working capital, those might go up and down throughout the deal process depending upon what we get. But we have to know where we're going to start,
Right.
and to have that creative, strategic discussion with you or any business development officer at the beginning is so critical.
Yeah.
Just to have a firm starting point.
And then also clearing out the hurdles in the closing process, because now you have an approval, you have a structure, the borrowers accepted the structure. Now you are starting the closing process. Some borrowers get that closing checklist and they're like, wait, there's more. Yeah, this is
Yeah.
where the fun starts. So you do lien searches and all these different, appraisals, environmental, every single one of these things that's happening can and probably will, at least one of them, something is going to happen in closing that you're going to need to address. And like I see tax liens all the time, unpaid tax bill, or maybe it says it's not paid, but it has, and you got to track down documentation. There's all these different things. It could be an appraisal, could be an environmental, it could be any number of things. So sometimes you find out, oh, they're in the middle of a lawsuit, or they just started a lawsuit. Like,
Oh yeah.
So you have to also be able to roll up your sleeves and get past these hurdles that are going to come up. And a lot of it depends on the lender too, because I've been at the last couple of shops I've been at have been great, but I had been at a bank once before and it would be like, if anything in closing happened that was slightly different than how we approved it, it would like blow up the whole transaction,
Sure.
which is stressful. So you got to avoid that. But I would say that since a lot of the people that follow us are lenders and we hear you loud and clear and everything you're saying is making sense. So, but a lot of people have to know how to get there. So that's where I come in, because when I started, I was a nobody and I had I had no leverage or influence, obviously. And when I got to Ready Capital, my last shop, it was a startup. And so I had nothing and we had nothing because we had
Mhm.
never made a loan. And although, it was the old CIT. So like people at least knew the license that we had acquired, like, and who the CIT people were, which ended up being a lot of the back office people. So like, I kind of used them and the name of CIT to help me build my business. And eventually, there's a box that we have to play with as lenders. And
Mhm.
I put that box right out into the marketplace. So I track stuff as close to or in that box as possible, like as close to the center of the box. And which, I mean, obviously A+ deals are going to always fit a box, but I'm not getting the Wells Fargo like deals. I'm getting, deals that require some creativity or something there that, we can add value with. So you also want to make sure it's somewhere that you're attracting deals, not only that you can do, but that a customer will accept and a referral source will accept, like in terms of your terms and your structure and things like that. So I go out to market looking for those. And like right now, it's like I'm looking for real estate, business acquisitions, and partner buyouts, some expansion. But that's it. I don't mess with startups that much and so on. So now I'm building my pipeline and now it's all about execution. So once you become a producer, you start to get a little bit of leverage within your shop, coupled with the rapport you have with your back office, because you have to
Yes,
be
yes, yes.
respected by them. You can't
Mhm.
bulldog your way through it. That's kind of like the pathway for us to get to where we need to be for you to want to work with us. But a lot of folks aren't there yet. Okay. So that's important to know. All right.
Mhm. But I believe they can get there because while I know that they have to get their experience as they get their experience, if I perceive the can-do attitude,
Right.
the right mindset, the willingness to work with me, then yeah, I'm willing to give it a shot. Because as you know, Ray, when I get a lending request, I don't just give it to one lender. I always survey two or three. I don't pursue three at full speed. I refuse to do that because but you almost always look at two. And
Right.
then usually the second one drops out pretty quickly or somewhat in the middle of the process so that it's very clear that one is the right one to go with.
That's fair.
And I know that if I'm getting term sheets from you or from the ones I choose to work with, those are almost as good as approvals because we vetted everything up front. Now, as you brought up, the closing process is fraught with peril. And I'm routinely astonished at, I would say, on average, I have probably between 4 and 5 deal killers that I have to overcome in the closing process because of all the things you mentioned.
On a single
Le-
deal.
on a single deal.
Oof.
Liens or lawsuits, or what was that on the credit report, or what was
Right.
all this stuff, which respectfully, Wells Fargo, B of A, Chase, all the big banner banks are going to automatically kill that deal and not seek to remedy that. So it's not surprising that I've tended to work more with community banks and non-bank lenders because those don't routinely crash a deal.
Yeah. The big banks are very tough to get that sort of pull. Like I could pick up the phone and call my chief credit officer,
That's right.
talk to him direct, and he's the decision maker. So that's something that you get with non-bank lenders and community banks, more
Yes.
so. Nothing
Yes.
against the big banks, but that's
No.
just the fact of the matter. And then, but I like what you said because I think this was me when I was 23 and just starting out, and it'd be like, well, why? Not credit dictates a lot of the structure, what we want, this and that. The underwriters, a lot of SBA shops are like credit ran institutions, and then salespeople are going out looking for those types of deals that credit wants. They bring them back. Credit makes a decision or says, hey, we need a little bit more of this, a little bit more of that. Sales goes and sells it. Right.
Mhm.
But I don't, I think it's more even, or at least I like to think that it's a little give and take. It's sales and credits equally both because, so when I I don't mind pushing back when I feel that I have an argument to push back on. And even if I don't know everything and I'm just starting out, just that effort, it sounds like, is appreciated by you and the borrower.
Big time, big time. And it becomes very easily seen because, and usually I know that it's a good fit once you and I and the borrower have gotten on that preliminary discovery slash underwriting call where you review the facts of the deal.
Well, I guess the big takeaway is like, all around the country, you have all these different SBA lenders. You have small banks, big banks, non-bank lenders, community banks, credit unions, everything.
Mhm.
And some are regional, some are local, some are national, some like real estate, some like biz acts. It's, you need kind of an arsenal of a few, if you're in your position.
You do.
And there's different levels that they all operate under. I mean, that's why everyone has different production levels. There's different risk tolerances. So there are shops where, you know, you're just not going to get away with the type of flexibility and creativity that you can at other shops. And but those shops are probably selling something different. Like you said, big banks, they've got the best rate in town. We were talking to that Bank of America rep
That's
the other
right.
day.
That's
She's
right.
like, she laughs if anyone brings up the rate because no one's going to beat her. So if she can get it done and her timeline is acceptable to the transaction, to the borrower, and the structure is like fine, like she's going to win the deal. And we all accept that, but if there's a little bit of hair and they need a little structure, like 100% financing on real estate or something like that,
Right.
you're not going to go there. You're going to go someone like me or, one of the other handful of lenders that's doing that, something like that.
That's right.
And so the shop does matter. It's, you got to, what you have when you're working for a shop and you go out to market with that value proposition. But for me, I just wanted to be like the best. And I thought non-bank lenders was the best way for me to do that and for me to add value to the small business community. All right, man, cool. Well, that's a lot of really good information. And it's so funny because we keep talking to people like bankers and other SBA lenders, and it's similar messaging, and it's so simple. Every time we talk, it's like everyone wants to just do a good job. And to do that, it's all about, these key factors: communication, doing what you said you were going to do. It's like, duh, like it's just a matter of repeating it and actually doing it. But none of this is, earth shattering or, it's nothing crazy. It's like simple stuff to be good at business. And it's just about executing and I guess making it a priority and playing at that high level. And then you'll be golden. And then you can start reaching out to folks like Keith, with, hey, I think I can help you with this. This is what we're doing that other lenders aren't doing that we think maybe can help you. And then executing on that. So, I mean, we just boiled the whole thing down within like a 30-second clip. I mean, we can edit everything else out now.
There you go. And Ray, I'm happy to be an extension of the bank in the sense that I'm not on salary with you all, yet I would like to be considered almost as much a part of your business development efforts as people within your bank. I'm happy to be your analyst, your underwriter. I can't be your credit person, but I really like to do all those analytics up front so that you have a deal that is really scrubbed and ready to be presented and doesn't have to have a lot of pre-work or difficulty for you to be prepared to do your job. So I like working with the right banks who allow me that freedom to do that.
And you're in the middle, so you have to manage two relationships: the borrower and managing that relationship, and the lender and managing that relationship. So if you're out in the middle of the ocean and the boat turns over, you can only save one person: the borrower or the lender. Who do you save? I'm just kidding. You don't have to answer that.
That's fair. And that's fair. And I'm going to answer that question by saying it depends on the day.
100%.
But I will say, no, truly, I mean, I like being an advocate for the lender too. The borrower is my client, but I have to advocate for the lender as well,
It's a
and
balance.
and make sure their interests are defended too, and make sure the borrower is educated onto what's possible within a regulated industry.
Yeah, it's it's all about being reasonable. Credit has to be reasonable. Your BDO has to be reasonable. You have to be reasonable, and the borrower has to be reasonable, and everyone can meet there. But I do like having someone like an advocate in the borrower's corner. I think that's really important. So I know we talked about kind of the evolution of your business. I was curious, where does it go from here?
I'm excited, Ray, because my core has been doing this work that I've done with you on getting people the right financing at the right time. And now I'm expanding my offerings, moving into an area that I'm really excited about. And it's as a result of working with borrowers over this time, and especially during the pandemic, where I got more insights into the fact that many operators struggle with the finance function of their business. They struggle understanding their financial statements. They struggle or have questions or have uncertainties about how do I work with the right bookkeeper, the right CPA, because time and time again, I see how that can be a roadblock or inhibitor in getting the best deal possible, or even them having an understanding about how they manage their finances and how they can use them or master them to really help them grow. So I'm launching a new program, a retreat-based model that help people, founders get comfortable with and master their finances. And I've developed a lot of new tips, tools, and techniques, and including, and on top of that, I'm doing a lot of work on mindset, where it's even talking about what might be holding people back from feeling comfortable. What are the experiences in their lifetime where they've had issues with trust or failures or things
Mm.
that give them trepidation? And so it's brand new work for me. I'm developing my original content, and I'm excited because I'm doing my very first retreat, next month, and launching a new brand called Financing Man that encompasses all those things. So it's complementary to the deal making work I do, and I'm not leaving that. But it's a really, I think, terrific complementary offering that I'm just really excited to bring to market and to talk about.
Seems very unique and deep. When you say retreat based model, what does that look like? Is that a
Sure.
weekend retreat?
Yeah, and for now it's virtual, but
Okay.
it can be. It's usually over three. It will be over 3 days. And the basic idea is the first day is a little bit about breakdown, really getting deep and seeing where are their issues, where are their struggles. And the second and third day are more about breakthrough,
Mm.
based on where someone's starting. And I pride myself, and I can meet them where they are. Is I can say if you're here or you're here, wherever you are in comfort level, I can meet you there and help guide you along your finance journey. And that's really my big promise about what I'm doing.
Well,
So
that's really interesting actually, because I mean, part of that is, it's like deep, like I said, like almost like
yeah,
emotional, like you're
it
getting
is.
down to their soul. And
I am.
why, what's motivating you to do this?
It's a massive amount of motivation because part of it was my own journey and my own story about my experience as a child and growing up in an entrepreneur's household and seeing the ups and downs of what that looked like. And as I was older, and before I even got into deal making and I was doing other strategy work, consulting work, and even running my own business, I noticed that certain things started to show up. And when I got really honest with myself as to saying, why am I struggling, or why are these things working and why are other things not working? It tied back to a lot of the experiences I had growing up. And then really starting to bring those out as a result of joining a mastermind group that I've been involved in a little bit over a year and a half,
Mm.
and seeing that when I'm speaking with other business owners and hearing their struggles or similar types of stories in this area, I got very inspired. And then, particularly when the pandemic came and I was doing PPP and idle loans, and for the first time, I'm speaking with founders who had never ever looked at their financial statements, and suddenly they had to look at them. Right, Ray?
Hmm.
I mean, you saw that, right? How many of these people were on cruise control or autopilot or any other metaphor, which showed that they were just not familiar what was going on because their businesses were running without concern. So during that time, because a lot of business owners opened up with me very vulnerably, very specifically about, hey, they were scared. They could suddenly, everything could fall apart and go down like a house of cards. And as they shared with me, as they told me their stories and their vulnerabilities, it inspired me to start creating content in the broader area of mindset and see where that would go. And really, it was cool, Ray, because the more I talk with people, the more I share, the more they share with me, the more it builds up this kind of body of knowledge and a reason why. I'm very, very motivated by a big reason why. And my big promise is feeling like so many business owners play very small. Um, they don't pay attention to the finance function. They don't wish to manage it actively, and it's always going to keep them small. And my promise to them is if you really get active with it and it doesn't require a lot of time, you can start to have a more expansive look. And it protects not just the downside, which is running out of money or going out of business or having horrible surprises, but active finance management means you're opening up much more about what your business can be, about areas for growth, the possibility of getting lending to fuel that growth.
That is awesome, man. I am so excited for that. I think that has the potential to be huge.
I really do. And for someone like me too, I think deal making is awesome and it has beginnings and just discrete beginnings and discrete ends. And yet I really want to work with borrowers and other people on legacy, on how I can provide really lifetime value for them. So
Yeah.
I'm excited. I call the retreat Making the Numbers Work for You.
Nice.
And on top of that, I have a year-long mastery program called Making the Numbers Work for Life. So I'm just about to launch these and really, really excited about their potential.
Perfect. Well, I appreciate you joining us today, man. I'm going to let you get back to it, but it was great catching up.
Yeah, Ray, I appreciate the opportunity to speak with you and to all your listeners out there as well.
All right. Take care, Keith.
Okay, adios.